Hey everyone, so welcome to another video of mine. So this is a Trendline investor. So I know most of you have been trading with me in the Trading with Trendline Investor series. Now, if you do not know what is the Trade with Trendline Investor series, now this is basically a series where I trade with 1 lakh capital, and I try to share my learnings with everyone. And these are live trades, and we started with 1 lakh and today we're up 11%. We started in 13th of July and we're almost 2 months now and we're up 11%. Now that's the kind of returns that we made, but the objective of this video today is to share this trading journal with you and try to help you understand what is a trading journal, what are the components of it, and how do you understand and how do you read this and how you should make entries as well. Okay, so this is a trading journal as of 5th of September, and we've had many trades in the past. So there are two sheets to this. One is the stocks which I'm holding currently in the Trade with Trendline Investor series, and other sheet is where I close the trades. So as soon as I close a trade, I move them to this sheet. We'll come to both sheets, but let's start with this first sheet. So there are two parts when you take a trade. First is the planning, and then it's the execution. Right. So first, let's look at the planning part. Now the planning part is this blue section. Okay. So when you plan a trade, you need to first have a scanner, and you'll go through the scanners, and if you find that the trade belongs to your setup, and if you feel that setup, if you have confidence in the setup, then you can go ahead and put that symbol here, and then you need to find initial stop loss. Now this should be entered manually. So once you enter the initial stop loss, so that is basically the point at which you would exit the trade that you have. Okay, then you have to enter entry price. Now entry price, let's say today Cummins India, let's say today is trading at 950, and probably you want to enter at 980 only. So then your entry price here will be 980. But when I took this trade, it was trading around 930, 940 or something, and I entered my entry price 950. So basically I want to enter at a particular point, either below the current market price or above the current market price. Now whatever that is, you just need to enter that entry price here. Now once you enter the entry price, now you need to know how much you want to buy. So you've decided what to buy, when to buy, and you have to decide how much to buy. Now that how much to buy depends on your capital and how much risk you are willing to take. Now for example, when we started off, we had a capital of around 1 lakh. Okay, now let's assume, sorry, this is the capital, right? So when you started, this capital was around 1 lakh. Now if you see here that 1 lakh is there, now plus whatever losses you take, that is added up, and then you have the new capital. Now initially, let's say you're just starting off, so that capital is 1 lakh. Now in this capital, what is the maximum number of stocks that you would be holding at any point? Now here I've defined that amount as 10. Now at any point I will not be holding more than 10 stocks. Now if I want to hold 10 stocks and if I have 10 lakhs 1 lakh capital, then how much can I afford to lose in one stock? Right? I'll again repeat, you need to know, to buy a stock, what is the amount that you are affording to lose when you buy a stock out of the entire 1 lakh that you have. Right? Now what I've defined that here is I've defined that as 1%. Now that's 1%. Now you might ask what this sheet is. Now this sheet is nothing but this cell is nothing but E3 divided by F3. So if I have 1 lakh capital and if I can buy maximum 10 stocks at a time, then per stock, maximum I can probably invest is around 10,000 rupees. But that's just for the sake of it. But the more important point is to understand what is the risk, right? Now risk should be that amount you would be willing to lose on a single stock, and that should be as a overall percentage of capital. Now example, let's say you have 1 lakh, right, and you buy, let's say 10 stocks, right? So per stock, let's say you can maximum risk 10,000. Now in this stock, what is your maximum risk that you are willing to lose, right? So maximum that you're willing to lose. So I am setting that money to 1%. So that 1% is what I mentioned here. So at any point in one stock, I will not lose more than 1,000 rupees, right? So that is your risk per stock. So per stock risk is 1%, right? Now here, if you see, I put as 0.5 for now, but usually this can be around 0.1, right? So 0.1 is 965, or depending on some situations, I reduce that risk to 0.5. So the last time I entered these trades, it was at 0.5. Okay, so that is completely up to you, but don't go beyond 2%, right? Some people go to even 3%, but that's a little aggressive. So the reason behind this 1% is because if you have 10 losing trades, you still lose 10% of your capital. But you should have such a bad strategy that you lose 10 consecutive trades, right, to lose 1%. Okay, so that's the next parameter. Okay, so this is nothing but your capital into the percentage. Now in this case it's 0.5%, right? Now if you make this 0.1, then that will change to 964.58, right, or 965. correct? Now the next is, now this is per stock, but you need to also define your risk for the overall portfolio. Now for the overall portfolio, your risk should be probably not more than 5%. Some people keep it 10% also, but I don't take it below 5%. Now for example, if you have 1 lakh, right, your risk on the overall portfolio should not be more than 5%. So which means you will not lose more than 5% on your entire portfolio. Now, how does this work, right? Now, let's say you had a stock, you bought at 10,000 rupees, you had bought another stock at 10,000 rupees, another stock at 10,000, another stock for 10,000, and you had bought 5 stocks, right? Now, we said 1% is per stock risk, right? So, in this case, 1% of 1 lakh is 1,000 rupees. So, you invested 10,000, but as a percentage of overall capital, you not lose more than 1,000, right? Now, if I invest only one stock, my portfolio heat, okay, will be 1,000. Now, let's say for another stock, you invest another 1,000, right? Now your combined portfolio risk is 2,000, right? Because you had 2 stocks and each you have invested 10,000, and the risk on each is 1,000. So now your risk becomes 2,000. Like this, let's say you invested in 5 stocks and each you have risked around 1% of your capital, 1% of your overall capital, okay? Now sometimes, let's say if you're, okay, let's take this example, right? Now let's say you invested in a stock, it is 1,000 rupees, and let's say your stop loss is 950, correct? Now what is stop loss? Stop loss is 50, correct? Now how do you decide the quantity, right? Now if your stop loss is 50 and your risk per stock is 1,000, then how much quantities you can buy? You can buy 1,000. It's a simple formula. It's 1,000 divided by 50. 50 is the stop loss. 1,000 minus 950 is stop loss, so it's 50. So you can buy 20 stocks, okay? So tomorrow, you buy 20 stocks into 1,000, so your total investment amount is around 20,000, right? So I probably will make this a little better. I'll just remove all of this. Okay, so let's start with 1,000, 950. So your risk stop loss is 50, right? Now quantity is what you do. 1,000 is your risk per stock, and you divide that by this one. So your total shares is 20 shares. So invested amount is equal to 20 into this. So investing 20,000 rupees, but your stop loss is just 50 rupees. So you were able to invest at 20,000 rupees. Now let's say your stop loss is 900, right? So then this becomes 100. Then you'll be able to invest only half that amount. Okay, so the point here is, the lower the stop loss or the lesser the amount of stop loss, you can invest more money in the markets. Now that's how we define our quantity. So here if you see, my quantity is H3. H3 is nothing but 482 divided by D8. So D8 is minus C8, right? So D8 is this, right? Minus C8. C8 is this, right? So 482 divided by 950 minus 880. So it gives me 7 shares. So I invest 6,650 rupees. Now if this was, let's say, 1%, right? Then this would double, right? This was 0.5, now increase 1%, so that would double, right? So that's how you define your quantity on the number of shares you buy. And once you keep buying shares, you need to also check your portfolio heat. Now right now we are in lots of profits, so that's why it's in positive, but otherwise this will be usually negative when you start off with. Okay, so this is nothing but this sum. Okay, what is it? Risk, trailing stop loss risk. Okay, we'll come to that shortly. But remember, this should not be more than 5%. Some people even go to 10%, but I recommend don't take it more than 5%. So once you plan your trade, so this is your plan, right? So this risk is nothing but stop loss, right? What is your stop loss percentage? Once you plan, then you put your GTT orders in Zerodha, and then you execute your trades. Once the trades executed, then you enter them here, right? And what is entry date? You could have planned this on 1st of August, and it got executed 11th of August, right? So then this is the number of days you're holding that stock after entry, right? So it's nothing but today minus H8. Then you decide quantity. So this quantity is what is in a Zerodha account. So you have to go in Zerodha and see, you placed an order for 7 and how much orders it got executed, right? So it will be 7 mostly, but here I added more shares later at some point. Okay, I'll come to that shortly. But let's say this is the number you bought here. In this case, here it will be 7. Okay, what is the average price? You have to look at the price what was entered in Zerodha, and then what is your stop loss. So usually a stop loss would be this one to start off with. Yeah, 880 would be your initial stop loss. So this would be 880 initially, and the risk here would be 1,000 or 500, or according to how you design. Now let's say initially let's say this was 880. Then my stop loss would have been around 2,300. Now that's because I increased my quantity, but usually in this case your stop loss would be 1,000. Okay, and then you have your trailing stop loss risk. Now this is nothing but your stop loss minus entry price. So if you see here, it is this minus this. Okay, so basically just given some conditions, okay, to calculate the stop loss, okay, to the risk, calculate the risk. Then you do what is in total investment amount. So invested amount is this into this, average price into quantity. So then you see what is this as a percentage of portfolio. So that is nothing but this divided by your capital. Okay, that is the time you invested, that was the percentage. But as of now, today's price, it will be much higher because the share price has gone high, then it will be much higher, right? So that is how it is. Then you have the current market price. You use a simple Google Finance formula, you'll get it. And then you calculate RR. RR is nothing but R8 minus D8. So R8 is a current market price minus D8 is your initial entry price. So that is the amount, that is the current reward. So you entered a 950, today is 1025. What is that difference? Divided by D8 minus C8. So D8 is here, entry price, minus C8. So what is the initial risk that you deployed and what is the current profits that you have? So that is nothing but if you initially risked 1 rupee in the market, today if it is up, so in this case, we initially risked around 70 rupees, right? 880 minus 950, 70 rupees. And then we entered a 980, our average price is 950 or you can say 983 and today it's at 1025, right? So that is the entire difference, correct? So we initially risked 70 and today 950 minus 1025 is 75. So we have risked 70 and we made 75 rupees till now. So that's why it's showing 1.07. Now if you risk 70 and you made 140, that is 1:2. So it will show 2 here. Okay, so that's simple. And then there is something other here. So here this one is nothing but your trailing stop loss risk. Okay, depending on each stock, you calculate everything. And since we are sitting on trailing, so since if you see Lakshmi came, we entered at 285, its stop loss is 265. But today we averaged up, we added more on the way up. And today we average price 342 and trailing stop loss 430. So we moved our stop loss from 260 to 430 and that's why we are sitting in profits. Now in case of Fortis, if you see, our stop loss is 245 and today the trading stop loss 269, right? But if you see here, we initially bought at 261 and then we bought more and because of which the price has moved to 273 and that's why we're sitting in small losses. Okay, so that is how you calculate the sheet. Now, next is pyramiding. How do you pyramid, right? So when you want to pyramid, you need to have a plan. So whenever there's blue, that's a plan. Now let's say you want to, buy, you want to add more of Fortis. Okay, now Fortis, what is the entry price? Let's say, just assume, okay, I'm just taking a random number. Okay, so let's say you want to buy more of Fortis at 280 and let's say your stop loss is, let's say 270. Okay, now how much will you buy? You should first define your risk that you want to deploy in this trade. Now what is the risk that you want to deploy? Usually it should not be more than 1% of your capital. So that should be 1000 divided by, right? What is the stop loss difference? 10, right? So you buy 100 shares. Now how much is this worth? 28,000 worth. Now this risk is nothing but, the stop loss, 10 divided by this, right? So your risk is around 3.5%. Your stop loss is around 3.5% and you're able to invest 28,000. Now if your stop loss is, let's say 260, then you'd buy less, correct? So if 260, then this becomes 20, correct? So you'll buy 14,000. If your stop loss is even less, then you'll buy even less, right? So this becomes 30, correct? So you buy so much. So this becomes also 30, right? So you buy 9,000 only. So that's the point here is you should try to keep your risk as small as possible. Then you can buy a big quantity of shares, but don't go beyond 25% of your overall portfolio. Okay, so that's how you plan. Now let's say this was this is the plan and then you execute this trade. So then what do? You have old and you have pyramid here, right? So in the old, you take this value here, quantity, and you put that quantity here. So the first cell is quantity and then you put the old price. So old average price is 273. So you put 273 there. Then you take the pyramid. Pyramid means the new quantity that you bought. Okay, because it's going high, you want to take advantage. So quantity is 33. And let's say you bought around 280. Okay, now this should be from 0 da. Okay, so totally you had 28,000 worth shares, you bought 9,000 more. So totally now you have 37,000 worth of shares and the new quantity is 137. So you take the new quantity and update here, okay, to 137 and you take the new average price 274.68 and you update that here. Okay, then you will have everything will be new. Then you also update your trailing stop loss. Okay, so in this case, trailing stop loss 250. So you update 250 here because your trailing stop loss here was 250. So that 250 should come here. Okay, so you update that. And then your pyramiding is done. So now you have your new set of holdings. Okay, you'll have a new set of holdings in this sheet here. Okay, so I've covered all of this. So invested amount is nothing but total invested amount here. It just takes sum of this row, column, and then the balance is nothing but, it takes this minus this. Okay, so that's a balance. So that shows a cash. So right now we are sitting on 100. We are fully invested in markets. Okay, but now once you take a trade and let's say it's stop loss or once it's in profit, you want to close the trade, then it goes to the trades closed. So what you do is you copy this sheet from here to here. Okay, here till current. Okay, you copy entire thing from there to there, and you just paste here. Right click and paste values. Paste values. So once you paste values, this entire row will be filled till here. Okay, and then you have to update your exit date. So update your exit date, your exit price, and rest just copy paste this, copy this entire thing and just paste it like this. Okay, it should simply work. It's all formula. Now this is nothing but Google Finance formula. P&L is nothing but your exit price minus entry price into the number of shares you're holding. Then return is nothing but again you see the formula here. U17. So what's the exit price? You want to see the return of your overall portfolio. You want to see what is the P&L divided by what is the invested amount. Okay, so that's your this one. And then risk reward, I already told this, it is your exit price minus your average price divided by your average price minus your stop loss price. So that gives you RR. And this is the total return on your capital. So capital, if you deploy 1 lakh and you take this and you see what is the overall return. So this as a percentage of overall capital, I have made only 0.35% here. Okay, so that's how you do. And then here you have something. So this is the zero the charges. Zero has two. If you go to the P&L, zero has two sections. One is charges and one is other debits. So you just put that here, and then you get your overall charges. This is nothing but this plus this, and then you have the P&L here, right? So P&L is nothing but the sum of all your this plus your charges, okay, minus your charges, and then you have total RR. Okay, and this is just some numbers. It's self understood. So you have winning trades. So it automatically every formula is here. You just need to. I'll put this sheet in the video, and then you can take it from there. So every formula is updated here. You just need to update this, and it'll automatically fill in here. Okay, and then you have RR. You can see your RR is nothing to know, but what is on the losing side? You want to know what how much are you losing? Are you losing more than what is planned? Right. So in this case, if you see, I'm not losing anything more than planned. I've always lost only 1 rupee that I'm investing in market. On the higher side, you want to see how much you're making. Right. Till now, if you see, one of my highest trades has been I invested 1 rupee and made 2.5 rupees. Okay. But overall, if you see here, I'm in losses. But if you go to the actual P&L here, because these trades are still running, I'm up 3% here, even if all my stops hit. And if you go to my zero the portfolio and if you see my trade with Trendline Series, I'd be up around 11%. Okay. So I hope this trading sheet helped. You can find the sheet in the comment section or in the description. Go and just click on download and you should be able to find it. But one other column that you need to add if you're a beginner is you need to add something like a comments here. All right. Now the reason you have to add this here, I'm following all the rules, so I don't have any problem. You can also add some trades like how you behave and how you want to understand your trades. So for example, if you say you did not follow plan, then you can just say did not follow plan, and then you need to jot down learnings from here, and then probably you need to correct those mistakes. So this trading journal is meant to correct your mistakes. Now if you see, we have never lost much more than what is planned, and we're going exactly by our plan. So that's why I don't have any comments here. But if it's a personal trading journal, you need to understand and you need to see what works. For example, if this was a rectangle pattern, then you say rectangle pattern trade works really well. So you focus more on rectangle trade patterns. So if you say inverted head and shoulders did not, I completely got this wrong, then you need to go and focus more on that pattern. So this is just a section where you can add your comments. It will really help if you're a beginner. Start jotting down your behavior in this trading journal, and you can learn how you're trading. So there are a lot of trading journal templates available. Do go and just Google, you'll find many. Okay, but I hope this video helped, and if you did like this video, then do share it with your friends, and don't forget to subscribe to my channel, and also don't forget to like this video. Okay, I hope this was really useful for you, and if you do have comments, you can ask me in the Trade with Trendline series daily at 11 p.m. every trading day at 11 p.m. Okay, so that's it, guys. I hope you enjoyed this video. Do let me know in the comments of how your trading journal is if you are having one. I'd be more than happy to understand from you as well. Okay, thank you. Have a good day and a good week. Bye bye.